Welcome. In today's TaxSnax, we're going to be looking at a VAT issue that arises from time to time in relation to billing. As we all know, as a general proposition, where a client is based in the UK, UK VAT is chargeable, but if the client is based outside the UK VAT isn't chargeable. Now, we're talking about services, not goods. Different rules apply to supplies of goods, and I say general proposition because there are exceptions. Say the client is based outside the UK, but the services in question relate to land. Then in that case, if the land to which the services relate is situated in the UK, then UK VAT would still be chargeable despite the client being outside the UK. So that's one of the exceptions. There are others. We're not going to be covering those today. What we're going to be looking at today is how we determine whether the client or customer is in the UK or outside. Because VAT is exceptionist, we don't use commonly accepted international concepts like tax residence or permanent establishment. Instead, for VAT purposes, we use the concept of a business establishment or fixed establishment. So, what are they? A business establishment is basically the place where the functions of the business central administration are carried out, or the place where the essential decisions concerning the general management of the business are made. In layman's terms, we're talking about the headquarters of a business, or to use a slightly more old-fashioned concept, the seat of a business. A business would only have a one business establishment, and that rarely changes. So that's a business establishment. A fixed establishment is not a million miles away from the permanent establishment concept. It has to be a place with a certain degree of permanence, and then on top of that, it needs to have sufficient resources in terms of technical resources and human resources. But sufficient resources to do what? That depends on the context. In this talk, our example is we're looking at services supplied to a person, and we're trying to determine whether that person is in the UK or outside the UK. So for these purposes, we'll be looking at, to the extent that we're looking at a fixed establishment, we'll be looking at whether that establishment has sufficient technical and human resources to receive and use the services. So far, I've been talking about whether a client is based in the UK or based outside. In VAT terms, under the UK VAT Act, that concept is encapsulated under the concept of belonging. So instead of saying a person is based in the UK or outside the UK, a technical language under the UK VAT Act, we're talking about whether a person belongs in the UK or belongs outside. And so how exactly does one determine where a person belongs? Under the UK VAT Act, where the person in question has no business establishment or fixed establishment, i.e. no establishment of either kind, then that person belongs where they have their permanent address, or where they have their usual place of abode, or if they're a body corporate, where they were established. Where the person has one establishment, let's say a business establishment, then that person belongs in the country which has that establishment. Of course, those are fairly straightforward scenarios. The difficulty comes where a person has more than one establishment. Say a person who has a business establishment in the US, but also a fixed establishment in the UK, for example, a branch. So in that situation where services are supplied, how would one determine whether the services are supplied to the US, where the person has the business establishment, or to the UK, where the person has a fixed establishment? Under the VAT Act, the test is you look at the establishment which is most directly concerned with the supply. So in our case, we're looking at services supplied to the client or customer, the establishment that will be most directly concerned with that to be determined on a case-by-case basis, but in our case, it would be where those services are received and used. So that is the UK test, and going back therefore to our general proposition, At the outset, I said as a general proposition, where we supply services from the UK and the client is in the UK, UK VAT. If the client is outside the UK, no UK VAT. In slightly more technical language, as provided for under the VAT Act, where services are supplied from the UK and the client belongs in the UK, then there is UK VAT. Where the client belongs outside the UK, then there is no UK VAT. So those are the tests that's laid down in the VAT Act. And again, because it is VAT, and VAT is a tax derived from a European directive, the Principal VAT Directive, one can ask the additional question, which is, well, is the provision in the VAT Act entirely accurate? And the short answer is, not quite. As I said, where difficulties arise is when a person has a business establishment in one country and fixed establishment, one or more, in a different or other countries. In the VAT Act, when that situation arises, we apply basically a tiebreaker by looking at where the services, by looking at which establishment is most directly concerned with the supply or the services in question. Under the European test, there is a hierarchy. There is a hierarchy between the business establishment and the fixed establishment. What that means is that the business establishment, which is the primary point of reference, the businesses, when we look at where services are supplied, we always start with the business establishment. And only if that produces an irrational result do we look at whether there is a fixed establishment and whether the services are supplied there. So does that matter? Because if one looks at a situation where a client or a customer, they have their business establishment in the US, they have a branch in the UK, and the services are supplied, and we know they are used exclusively in the US, then under the UK test, the US will be the establishment most directly concerned with those services. And under the European test, the US as the business establishment, they would be the primary point of reference anyway, so the services will be treated as supplied there, because treating the services as being supplied in the US would not produce an irrational result. They were all used there. By the same token, if we say change the element of the example a little bit and say that all the services are used in the UK by the branch, then the branch under the UK test would be the establishment that's most directly concerned with the supply or with the services. So the services will be treated as supplied here in the UK. And if we were to apply the European test, then using the primary point of reference with the services going to the US and treating it as being supplied there, that would be an irrational result. Why? Because the services were not used there. They were used here in the UK. So to treat them as being supplied in the US would be irrational. So applying the European test will also come back to the UK, and the services will be treated as supplied in UK and subject to UK VAT. So in most cases, it doesn't matter that the tests under the VAT Act and the test under European applicable principles are framed in different terms, or in fact, I would say that they would be substantively different in one important detail. So why does it matter? Well, where we have a borderline case, say services are supplied and they're used in equal measure in both the US and the UK, then if we actually look at using the most directly concerned test, that creates some difficulties, because if services were used in equal measure, how exactly would one determine which country was most directly concerned with the services in question? Where we apply, but if we were to apply the European test, then we go straight to the US, because that's where the headquarters are located. And we then ask a slightly different question, not a tie-breaking question, but we just ask simply, if we stay with the US as the point of reference and the place where the services are treated as supplied, is that or does that produce an irrational result? And the answer may well be, no, it doesn't. Why do I say that? Well, let's take a step back. What are we looking at? We're looking at VAT which is a tax on consumption. So if we were to apply pure principle, then the tax should be payable where the services in question are actually consumed. But of course, if we have to look at where services, whatever they may be, if we have to look at services in every case at the location where they're actually consumed, that becomes an enormously difficult and in some cases impossible exercise. So in order for the tax to work, the VAT system lays down the place of supply rules. And the place of supply rules for services, the default rules, they are the rules that we've been looking at. So instead of looking at actual consumption, we look at where the customer is based. Or in more technical VAT terms, we look at where the customer belongs. We look at where they have their business establishment, where they have their fixed establishment. So the purpose, why all these concepts exist, why the rules exist at all, is the acknowledgement that looking at actual consumption is just too difficult. So we have a set of proxy rules to provide certainty. So the idea behind these rules is that it gives us an answer where if we were to look at more substantive factors in the real world, we may not be able to get an answer. So the purpose of these rules is to provide certainty, is to enable the tax to be operable, to be workable. So if we look at it from that perspective, in a case where in real terms, it's very difficult to tell whether services were used to a greater or lesser extent in one country or the other, it would not be irrational to say, well, because we can't tell by reference to real world factors, let's just apply the rules. Well, the rules say we look at where the client has their business establishment, that is in the US, that gives us an answer. It's not irrational, because if we were to move away from that to look at real world factors, well, that's exactly the exercise that the rules exist to replace. So, i.e., the rules exist so that it becomes unnecessary to look at real world factors. So therefore, it's rational just to rely on how the rules apply. So in that situation where it's too close to call, applying the tiebreaker that's inherent in the UK test, i.e., which is most directly concerned with the supply in question, that revives all the difficulty one would encounter in trying to assess the place of actual consumption. Whereas if we apply the hierarchical test, those difficulties should not arise, because we look at the primary place of reference, and then we say it's not irrational to move away from that, because what other rational choices are there? Now, I'm not mentioning this discrepancy between the UK test and the European test so that in every close call situation, one has an argument with HMRC. I'm not, because HMRC accepts the hierarchical nature of the test. It's in their guidance. If, for example, if one looks at the internal manual where they discuss the place of supply rules. So the only real gap is not between how HMRC might approach the question or how the taxpayer might approach the question. The real gap, funny enough, is it's not in the legislation. So anyway, that's what I'm going to talk about in today's TaxSnax. I should mention, of course, that so far, in today's talk, we've only looked at services as they're supplied from a business to another business. The rules on the place of supply rules as they apply to services supplied from a business to a private consumer, i.e. someone who is not carrying out a business for VAT purposes, are different, and they're not covered in this talk. Again, if you would like to see those rules covered in a different talk, in another TaxSnax, just drop us a line, let us know. I mean, there are, and also other bite-sized VAT topics you might like to see covered, and I'll see what we can do. So I'm going to stop there now. Thank you for listening, and have a great day.